Wales and northern England. The southeast and East Anglia staying dry until the evening when there is the risk of some heavy thundery showers, but they'll be somewhat hit and miss. By Sunday, there's still a chance of some showers, but mostly across the south, turning drier through next week, but also quite a bit cooler.
We are GB News.
We're right across this great nation.
On TV,
on radio, on digital.
Absolutely everywhere.
We don't talk down to you.
We embrace all voices.
With honest and civilised conversation.
we're not part of the establishment.
We're one of you.
And we're only getting started.
Join us on GB News,
The People's Channel.
Britain's news channel.
Every morning from 6 o'clock, we'll wake you up with GB News Breakfast with all the stories you didn't know from the night before.
So whether it's serious news, entertainment, or your own views from all over our great nation, we're here to kick off your day with a smile.
The national media should be reflecting and reporting what's happening here.
You will notice the northwestern accents.
Whether you're with us on TV, radio, or online, every morning it's breakfast from 6 a.m. Hope you can join us.
Join us for Ministry of Offence, the comedy panel show that's just like the news, in that the left fights the right and it doesn't really seem to matter who wins. We cover the big stories. It was in fact a troop of baboons and not angry vegans.
I like that.
And the really important stories.
Fat naked cow gets stuck in swimming pool.
It's a headline in a lot of local newspapers. Yeah.
we're on the same team, Nick. Yeah, but I'm just helping you.
Join us for Ministry of Offence, Saturday nights, 8 o'clock on GB News.
I'm Dan Wootton. Join me Monday to Thursday from 9 to 11 for the feistiest and most fun news debate on TV, where free speech reigns. I'll bring you a sharp take on the day's biggest stories, bombshell newsmaker interviews, and A-list guests. And I guarantee you, no spin, no bias, no censorship, and no reason to go to bed. That's Dan Wootton tonight, Monday to Thursdays from 9 on GB News.
And welcome to Friday's edition of On the Money, where we're focused on the UK's cost of living crisis, helping you beat the squeeze. I'm Liam Halligan, and for the next hour, we'll be talking about yesterday's rise in UK interest rates. Did the Bank of England bottle it? Amidst widespread concern that to seriously tackle inflation, the bank should have raised rates by more. Hard-pressed firms and households facing higher borrowing costs may think otherwise. We hold a detailed discussion. Plus, travel chaos is ongoing. We report from Gatwick, while revealing the industry which made a financial killing during lockdown. On the Money, after the GB News headlines with Rhiannon Jones.
Thank you, Liam. It's coming up to 2 minutes past 1, your top stories from the GB newsroom. London Gatwick is cutting the number of daily flights this summer to help tackle issues with staffing. The airport will limit its number to 825 flights a day in July and 850 in August. That's down from 900 in previous years. Gatwick said the decision was taken to help passengers experience a more reliable and better standard of service. Meanwhile, Gatwick Airport says staff shortages played no role in the death of a disabled passenger as they were leaving a plane. It says the incident occurred while airport staff were helping disembark 3 passengers with restricted mobility. EasyJet confirmed the death in a statement yesterday. The man reportedly fell down an escalator after getting off the plane without a helper. A formal investigation is underway. Hundreds of railway workers at South Eastern will vote on whether to strike as disputes over pay and jobs continue. The ballot opens next week and closes on the 11th of July, which could see strikes start from July the 25th. That as half of rail lines close on Tuesday, Thursday and Saturday of next week because of an RMT union strike. The union's also staging a 24-hour walkout with Unite on the London Underground on Tuesday of next week. Julian Assange's wife, Stella, says they'll appeal the order the Home Secretary signed to extradite Julian Assange to the US. The WikiLeaks founder faces charges of espionage and has 14 days to appeal the decision. Mr. Assange is wanted by the American authorities over documents leaked in 2010 and 2011. The Home Office said the UK courts have found extradition is compatible with his human rights, including his right to a fair trial. WikiLeaks has called it a dark day for press freedom and British democracy. Julian Assange's wife, Stella, says they'll use every avenue to appeal the decision.
This was always a possibility that Priti Patel would approve sending Julian to the country that has plotted to assassinate him. We're not at the end of the road here. We're going to fight this. We're going to use every appeal avenue. And we're going to fight. I'm going to spend every waking hour fighting for Julian until he's free, until justice is served.
The President of the EU Commission has proposed Ukraine becomes a formal candidate for EU membership. In her statement, Ursula von der Leyen, wearing the colours of the Ukrainian flag, said it was on the understanding the country carry out a number of reforms. Ukraine says it's grateful for the proposal.
Yes, Ukraine deserves European perspective. Yes, Ukraine should be welcomed as a candidate country. This is on the understanding that good work has been done, but important work also remains to be done. The entire process is merits-based. So it goes by the book, and therefore progress depends entirely on Ukraine. It is Ukraine that has it in their hands, and what could be better to shape your own future.
Downing Street has welcomed the possibility of the UK hosting the Eurovision Song Contest in 2023 if Ukraine can't. A Number 10 spokesman has pledged to ensure it would overwhelmingly reflect Ukraine's rich culture, heritage and creativity. The European Broadcasting Union's decided next year's Eurovision, which Ukraine won this year, wouldn't be held in the war-torn country. Instead, the BBC's in talks to host it in the UK, this year's runners-up. The Chancellor suggested there'll be no personal tax cuts until rising prices are brought under control. In a letter to the Bank of England's Governor, Rishi Sunak said fiscal policy must remain responsible and not exacerbate inflation. The bank increased interest rates to 1.25% yesterday, the fifth rise in a row, and predicted inflation will top 11% in the autumn. And parts of the UK today could reach up to 34 degrees as the Met Office issues a level 3 heat health alert for London, the east of England and the south east. Level 3 alerts are issued to help healthcare services prepare for possible increases in demand due to the heat. Try and stay cool. This is GB News. We'll bring you more as it happens. Now, though, it's back to Liam with On the Money.
And coming up on the money today, the Bank of England faces criticism for its decision to raise interest rates yesterday. Criticism that borrowing costs didn't go up by enough. After the US Federal Reserve imposed a decisive 0.75% rise in interest rates in America, the Bank of England was expected to follow with a similarly bold move, but it wasn't to be. Will this caution mean rates ultimately have to rise more to squeeze out inflation, causing more pain overall? We hold the detailed discussion. Plus, we'll be hearing the latest from Gatwick Airport. After hundreds of flights have been cut in a bid to combat ongoing air travel chaos. And each day on The Money features an in-depth Money Talks interview. All today we meet Andrew Lane. He's Managing Director of Leeds-based manufacturer Union Industries. They make quick operating electric doors. He'll be telling us about working with big firms like Tesco and Asda, while describing the Union Industries business model built on employee share ownership and which aims to keep production entirely within Yorkshire. And a good thing too, that's later in the show. And as ever, I want your questions, opinions, ideas. What do you think of the issues raised in today's On the Money? email me, gbviews@gbnews.uk, or tweet @gbnews. I'll read out some of your messages later in the show, so stay with us because this is GB News. I'm Liam Halligan, and you're on the money. Did the Bank of England bottle it yesterday, failing to show sufficient resolve to bear down on inflation? I think it did. The bank's Monetary Policy Committee, or MPC, has woefully misjudged the extent to which inflation would rise over the last year and more. The bank had to increase its inflation forecast no less than 8 times over the last year, as prices have risen much faster than the MPC expected. Yesterday, the bank had an opportunity to demonstrate it now fully understands its responsibility to contain price pressures by raising rates decisively. It failed. Earlier this week, the mighty Federal Reserve, the US central bank, increased rates in America by 0.75 percentage points, 0.75%. This was a bold move from the Fed, showing that US authorities are determined to crush inflation by raising borrowing costs and slowing down the economy. Here in the UK, the Bank of England was widely expected to follow suit, pushing up rates by at least 0.5% in a bid to rein in expectations of higher inflation, squeezing price pressures out of the system. Instead, the Bank of England was much more cautious. The MPC yesterday raised interest rates by just 0.25% to 1.25%, still ultra low. That seems seriously inadequate to me, seeing as the bank also forecast inflation will soon hit 11%, and considering that official inflation forecasts have for many months now been serious underestimates. In my view, the Bank of England is now riddled with groupthink. The MPC is dominated by ultra-cautious civil service insiders, rather than bold, decisive professionals with serious experience of financial markets. And that's our On the Money question today. By refusing to raise rates by more than 0.25% again, did the Bank of England bottle it? Grown-up conversations with people who really know their stuff. That's what we do here on The Money. And I'm delighted to welcome today a new guest. He's Myron Jobson. He's Senior Personal Finance Analyst at Interactive Investor. Great to have you with us on the show, Myron. And an old favourite, Vicky Price. She used to run the government's economic service. She is Chief Economist at the Centre for Economic and Business Research. Vicky also joins us. Let's start with you, Myron. What's your sense of what the Bank of England did yesterday? I think it's fair to say, as last month, the financial markets were expecting a 0.5-point rate rise. They only got 0.25.
Yeah, it's quite interesting. As you say, Liam, central banks across the world are, under pressure to up interest rates to rein in inflation, which just remains rampant. And with the US, as you quite rightly said, 2 days ago, the Fed upped it by 75 basis points.
Yeah.
And that's following inflation figures.
That was eye-catching, wasn't it? I didn't expect that.
Yeah, well, following inflation figures which show that inflation rose by 8.6% in the US. And some people thought, some economists thought the same might happen, something similar might happen in the UK, might up it by 50 basis points, but they didn't. And the simple reason is it's because the Bank of England doesn't want to up rates too much because they don't necessarily want to push the economy, which appears on the cusp of a recession, into a full-blown recession, it seems.
That's their main argument, isn't it? We've had 2 successive months now of negative growth, economic contraction, in both March and April on the preliminary figures, though they could change. And so the Bank of England's argument is that it doesn't want to be too hasty and it doesn't want to push the economy deeper into slowdown than it otherwise would. Vicky Price, let's turn to you. You and I have often discussed interest rates over the recent months, indeed over recent years. You're generally, if I may say so, more dovish than me. You're more cautious about raising interest rates. You're less concerned about inflation than I am. It's a personal thing, I guess. So I'm interested in your view. Do you agree with the Bank of England that it only raised interest rates by 0.25% yesterday, rather than 0.5%?
You probably know my answer to that, which is yes, I agree with what they've done. But it's interesting, in your introduction, you mentioned how there are loads of Treasury insiders, if you like. Yes, there are some people there who used to be at the Treasury who are deputy governors. but there are loads of independent members as well. And it's interesting that a number of those independent members have, if anything, been more dovish, if you want to call them that, than others in the Monetary Policy Committee. So that's the first point. The second point, the Bank of England was already forecasting, just when they raised interest rates last time, that there would be no growth in the economy practically from the middle of this year, well, certainly towards the end of the year, and through 2023. So any further increase in interest rates, way above what the markets were already anticipating, will push the economy into recession. And what's going on in the US right now, yes, they surprised the markets by raising rates by 0.75%, which was quite a shock. But what happened with it is that A, they reduced their forecast for growth very significantly, and B, the markets immediately upgraded their expectations of how high interest rates would go. And with it, the market started to think we're into recession territory. So it's a very fine balance to strike between pushing expectations and therefore everything that people do, because you can, with expectations, bring the economy down much faster than if perhaps the expectation is a slightly more optimistic one about what may happen over the next few months. So it is very, very tricky for them.
I'll just come back to you, Vicky, briefly, if I may, before I return to Myron. The thing is, you had the 3 members of the 9-strong MPC yesterday that voted for the half-point rise. They were all external members. The internal members, they act as a bloc. A lot of them are appointed directly by the Treasury. They're ex-Treasury people. And there's a sense, certainly, not just to me, but to many people across financial markets, that the MPC, it's lost its independence. There's no grit in the oyster. No internal member of the Bank of England's Monetary Policy Committee, Vicky, has voted in a way that wasn't in the majority since 2013. It isn't just me talking about Bank of England groupthink. It's ex-MPC members like Andrew Sentance, like Kirsten Forbes.
Well, we have had some of the internal members, like Dave Ramsden, if I recall, who has voted for a faster increase, a 50 points increase. And we have had some of the external members in the past voting for much lower increases or no increase. I mean, we've actually had a variation on this. So the fact that you mentioned now that the external ones are becoming a bit more hawkish and the others are perhaps a little bit more dovish, it's been the other way around at various stages in the past. And I think that in many ways proves the independence. So it moves depending on what it is that people are looking at, and everyone looks at the data, looks at what their agents are telling them from all around the country, looks at the recession concerns, looks at what happens elsewhere. And of course, when they made that decision, they already knew about the US decision. And yet they made that overwhelming decision. So we have to be a little bit more careful when we say that they're not independent. I think that what they've proved by oscillating the way you've described, that actually in many ways they come to some agreement, which shows that, yes, it has to be a united vote at some point, in the sense that, you know, it's going to be a majority one way or another. But overall, they have been quite independent in their thinking.
Myron, Vicky and I are talking about the composition of the Monetary Policy Committee, the 9 economists, including the governor, who make these interest rate decisions. It's important to me that the Bank of England is seen to be independent of the Treasury, of government ministers, of the civil service more broadly. They will impose the interest rate pain if they think it's best for inflation in the long run. But out of these sometimes arcane-seeming conversations, there are real implications for ordinary people, households and firms. Now, you're a personal finance specialist. We do know there aren't as many variable rate mortgages around as there used to be, but we do know that with interest rates going up, or do we, that the best thing you can do now if you do have a mortgage is to fix?
Yes, I'll say so. So there's around 2 million homeowners with a variable rate or tracker mortgage, the ones that are linked to the Bank of England's base rates. And as you quite rightly said, there's around 85% of mortgages and 94% of new mortgages are fixed-rate mortgages.
Yeah.
So not many people, homeowners luckily, are going to be affected by yesterday's rate hike. However, when it comes to them having to remortgage, once their fixed-rate period comes to an end, that's where the
it's
headache
1 year
comes.
deal, 2 year deal, 5 year deal. A 10-year deal is very rare, isn't it? My understanding. And of course, businesses, they borrow too, and they don't really have sort of fixed rate mortgages, do they? Businesses often borrow in small bits. So in some senses, this interest rate rise will slow down the economy. But if you'd have been on the MPC, and I'm sure it's only a matter of time, that ship sailed for me, far too independent-minded, in my view. If you were on the MPC, would you have increased rates by 50 basis points or even 75 basis points, given that inflation is heading for 11%, according to the Bank of England?
Yeah, it's quite interesting because inflation, raising rates is becoming a blunt tool to rein in inflation because the factors that are fueling inflation are beyond the Bank of England's sphere of influence.
Because of the low number of variable rate mortgages, as you said.
Yeah, exactly. And we also can't forget about oil prices, the devastating war in Ukraine, and obviously the post-COVID supply bottlenecks, which are affecting and fueling inflation. So it's a tricky one because, as I said earlier, central banks across the world are playing catch-up, and if you raise rates by too much, it puts pressure on people who are high leverage, businesses that are high leverage, and people with
lots of debt.
And that's the issue.
Vicky, let's just go back to you briefly. I wanted to get your thoughts on sterling. There's a concern that if the Bank of England continues to raise rates by less than other central banks, particularly the US Federal Reserve, sterling will weaken because there's less of a return on sterling because interest rates are relatively lower. That weaker sterling will then make our imports more expensive and cause inflation. That's another reason, isn't it, to raise rates more. Do you recognise that we are quite exposed if sterling does weaken to imported inflation?
Oh, we are exposed. There's no doubt about it. If the exchange rate falls, then costs increase of anything that we import. No doubt about that. The real question, though, is whether it's the job of the Bank of England to keep the exchange rate high. And of course, they have to take that into account when they make interest rate decisions. But when you look in the past and what has happened to UK exchange rate, to the pound, it has tended to move a lot more with expectations of growth in the economy. So in other words, at the time of for example, the vote to leave the EU, then the exchange rate fell very significantly. And that was because the expectation was that we were going to be growing more slowly. And it's interesting, we have been putting our interest rates up, much earlier than many other countries. The ECB, the European Central Bank, hasn't done it yet, even though it's saying it's going to do so next month. And the exchange rate has been weak. And the markets have assumed that we are not going to grow very fast. When you look at some of those forecasts that I mentioned earlier, even by the MPC, we're talking about recession. That's what is determining mostly right now the exchange rate. And the MPC can hardly push it up by just adding an extra quarter of a point to the interest rate increase because the markets have decided that we're in for a very low growth period ahead.
Interesting stuff, Vicky. Vicky Price there suggesting that sterling is less driven by interest rate differentials with the US and other economies than it is by our growth prospects. Great to have you with us as ever. Vicky Price, Chief Economist at the Centre for Economic and Business Research, and indeed Myron Jobson, Senior Personal Financial Analyst at Interactive Investor. Great to have you with us, mate. See you another time. Now, this is On the Money with me, Liam Halligan. After the break, we'll be discussing what's going on at Gatwick Airport, where hundreds of forthcoming flights have been cancelled in a bid to tackle the summer travel chaos. Stay with us. You're On the Money.
We are GB News.
We're right across this great nation.
On TV, on radio, on digital.
Absolutely everywhere.
We don't talk down to you.
We embrace all voices.
With honest and civilised conversation.
We're not part of the establishment.
We're one of you.
And we're only getting started.
Join us on GB News,
The People's Channel.
Britain's news channel.
Every morning from 6 o'clock, we'll wake you up with GB News Breakfast with all the stories you didn't know from the night before.
So whether it's serious news, entertainment, or your own views from all over our great nation, we're here to kick off your day with a smile.
The national media should be reflecting and reporting what's happening here.
You will notice the northwestern accents.
Whether you're with us on TV, radio, or online, every morning, it's breakfast from 6 a.m. Hope you can join us.
Join us for Ministry of Defence, the comedy panel show that's just like the news, in that the left fights the right and it doesn't really seem to matter who wins. We cover the big stories. It was in fact a troop of baboons and not angry vegans.
I like that.
And the really important stories.
Fat naked cow gets stuck in swimming pool.
It's a headline in a lot of local newspapers. Yeah.
We're on the same team, Nick. Yeah, but I'm just helping you.
Join us for Ministry of Defence, Saturday nights, 8 o'clock on GB News.
I'm Dan Wootton. Join me Monday to Thursday from 9 to 11 for the feistiest and most fun news debate on TV, where free speech reigns. I'll bring you a sharp take on the day's biggest stories, bombshell newsmaker interviews, and A-list guests. And I guarantee you, no spin, no bias, no censorship, and no reason to go to bed. That's Dan Wootton tonight, Monday to Thursdays from 9 on GB News.
And welcome back. It's 1:24 and you're on the money here on GB News. Now, tens of thousands of people hoping for a summer getaway have been hit by travel chaos in recent weeks, with flights across the UK being either delayed or cancelled. Well, in a bid to tackle further mayhem of cancelled flights, Gatwick Airport's instructed its airlines to reduce the number of departures to 825 per day in July and 850 in August, down from 900 daily in previous years. Gatwick hopes that this will make summer flight timetables, in its word, deliverable in light of staff shortages that have helped cause cancellations and delays. Well, our national reporter Paul Hawkins joins us live from Gatwick Airport. Paul, tell us about the atmosphere there. I mean, can you think of anything worse if you're a family? You've been saving up for a holiday. Finally, the day arrives. You turn up at the airport with the kids in tow, buckets and spades packed, and your flight's cancelled.
Yeah, we've all had that feeling, even if you don't have kids, Liam. You know, you turn up to the airport, you wake up at stupid o'clock in the morning, get to the airport, but you're really excited because you're going to go on holiday, and then your flight's cancelled. And that is the gap between expectation and disappointment that Gatwick is trying to close. So it's about managing expectations, and that's why it's effectively said to the airlines that fly from here, look, you're going to have to schedule less flights per day because clearly you don't have the numbers of ground handling staff to turn around the planes, to get the baggage on board, etc. So they've stepped in, they've taken control of the situation. And in fact, the number of flights for July and August, you outlined the numbers there, it actually only equates to about 5% of the flights over July and August that will be affected. And of that 5%, if you're planning on flying from the airport over July and August, you'll get an email saying your flight's been cancelled, but the likelihood is that the airline, the same airline, will try and book you on a flight at a slightly different time. So instead of flying at, say, 7 o'clock on a Friday night, you'll fly at 7 o'clock on a Saturday morning. Alternatively, you may fly with a different airline. They do have to legally offer you that alternative. A very tiny number of that 5% may end up having to kind of reschedule their holiday significantly. But effectively, when we talk about chaos, yes, the airport admits there was some disruption over the Jubilee weekend, that the airline industry was looking at some disruption with last-minute cancellations when people turn up to the airport and you get the chaos. But what they're trying to do now is get ahead of the curve. So right now, you'll find out if in 6 weeks' time that you're going to have to make adjustments. You'll know about it well in advance and you'll be able to plan accordingly.
It does seem like a sensible thing to do, doesn't it, Paul, just to acknowledge and admit that the flight isn't going to be available. And it seems to me, from where I'm sitting, that a lot of these delays and cancellations are caused by a shortage of staff. Is there any word from the airlines that they're addressing those staff shortages? We know lots of people have left the workforce. We know it takes a long time, not just to train, to get clearance for new airside staff to come into the workforce, given, obviously, all the security concerns.
Yeah, absolutely. In terms of the airport security staff, Gatwick have already recruited 400 extra people, and they are going to be actually actively out there working, checking bags, helping passengers in the next couple of weeks. Their target for the summer is 450, so they're almost there. In terms of ground handling staff, and they're employed by the airlines are recruiting all the time, but as you say, it does take time for to get up to scratch. Big picture, effectively, during the pandemic, the airline and the air travel industry, it contracted, and now it's about expanding, and for supply to match demand. They were taken a bit on the back foot by the swift increase in demand from airline passengers, and so it's now about the airline industry expanding so supply meets demand.
Well put, Paul Hawkins, our national reporter, live for us from Gatwick Airport there. Now from the air to the sea, because the pandemic affected thousands of British businesses, of course, which were forced to reduce or stop their services. But it wasn't all doom and gloom. Some lucky industries made big financial gains, and among them was the container shipping industry. The rise in online shopping over the last 2 years has seen the sector boom, and demand for seaborne freight transportation shows no sign of slowing anytime soon. Our East of England reporter Ed Crawford has this report.
On the waters beyond Britain's coastline, there is a storm on the horizon. When the world descended into lockdowns in 2020, millions of people stuck at home began ordering unprecedented amounts of products online. Retailers posted record profits, with Amazon's revenue raising by 38% to more than £318 billion. The surge in online spending created a gold rush in the cargo shipping industry, with container fleets keen to facilitate this burgeoning trend. Simon Heaney, who works for Drury Shipping Consultancy, has witnessed this maritime economic boom firsthand.
The latest earnings season that just went by for the first quarter, carriers were able to post operating margins of approximately 60%. Prior to this, they would have been happy with 3%, frankly, and often they made a small loss. So it's night and day in terms of what's happened. So container lines absolutely are the winners in terms of this pandemic.
The rising consumer demand led to higher prices, with producers vying to get stock on board any vessel going. Some exporters' attitude was get it to Europe no matter what, and as a result the prices more than tripled within a year, leaving the consumers with higher costs. Others in the industry remember the exponential rise in prices.
If we look at pre-COVID levels to the peak, which was September, October 2021, rates increased for a standard 40-foot container, which is the kind of container that you'll see on the back of trucks going up and down the motorway, increased from just shy of $2,000 to move that from Asia to Europe to $19,000 to the UK. And so that's almost a tenfold increase in that time.
As well as increased demand driving the prices higher, the shipping industry had to contend with global issues like never before. The war in Ukraine, sanctions on Russia, and a zero-COVID policy in China has led to unforeseen disruptions in the supply chain. Shanghai has some of the largest ports in the world, so when the Chinese economic machine ground to a halt, the economic effects were instant. The existing global backlog of goods increased, and the price for consumers continued to grow as demand outstripped supply. Shipping rates had gradually decreased while Shanghai was in lockdown, but now China is opening up, and shipping analysts say on-board container availability will diminish, and once again the global supply chains will be pushed to the limit. It seems no one can predict which way the tide will turn, but with the shipping rates likely to continue rising, this will lead to higher prices trickling down to the consumer. Ed Crawford, GB News.
Our East of England correspondent there, Ed Crawford, reporting on the freight shipping industry. This is On the Money with me, Liam Halligan. Coming up after the break, it's today's Money Talks interview with Andrew Lane, Managing Director of Leeds-based manufacturer Union Industries, the company whose products are used in distribution centres across the UK and Europe for clients such as Asda, Tesco and many more. That's after the GB News headlines with Rhiannon Jones.
Thank you, Liam. It's 1:32. Your top stories from the GB Newsroom. London Gatwick is cutting the number of daily flights this summer to help tackle issues with staffing. The airport will limit its number to 825 flights a day in July and 850 in August. That's down from 900 in previous years. Hundreds of railway workers at South Eastern will vote on whether to strike as disputes over pay and jobs continue. The ballot opens next week and closes on the 11th of July, which could see strikes start from July the 25th, increasing threats of a summer of travel chaos. It says half of rail lines close on Tuesday, Thursday and Saturday of next week because of an RMT union strike. Stella Assange says they'll use every avenue to appeal the Home Secretary's decision to extradite her husband, Julian Assange, to the US. The WikiLeaks founders wanted by the American authorities over documents leaked in 2010 and 2011. He faces charges of espionage and has 14 days to appeal the decision. President Volodymyr Zelensky has said that Ukraine being granted candidate status for EU membership would help the country defeat Russia. Wearing the colours of the Ukrainian flag, the president of the EU Commission, Ursula von der Leyen, said the proposal was on the understanding Ukraine carries out a number of reforms. Downing Street has welcomed the possibility of the UK hosting the 2023 Eurovision Song Contest if Ukraine can't. A Number 10 spokesman has pledged to ensure it would be overwhelmingly reflective of Ukraine's rich culture, heritage and creativity. The European Broadcasting Unions decided next year's Eurovision, which Ukraine won this year, wouldn't be held in the war-torn country. Instead, the BBC's in talks to host it in the UK, this year's runner-up. TV online and DAB+ radio, this is GB News.
Direct Bullion sponsors the Finance Report on GB News for gold and silver investment.
Here's a quick snapshot of today's markets. The pound is 1.226 to the dollar. It's 1.170 to the euro. And the price of gold currently stands at £1,504.63 per ounce.
Direct Bullion sponsors the Finance Report on GB News for real-time investment.
We are GB News.
We're right across this great nation.
On TV, on radio, on digital.
Absolutely everywhere.
We don't talk down to you.
We embrace all voices.
With honest and civilised conversation.
We're not part of the establishment.
We're one of you.
And we're only getting started.
Join us on GB News,
The People's Channel.
Britain's news channel.
Every morning from 6 o'clock, we'll wake you up with GB News Breakfast with all the stories you didn't know from the night before.
So whether it's serious news, entertainment, or your own views from all over our great nation, we're here to kick off your day with a smile.
The national media should be reflecting and reporting what's happening here.
You will notice the northwestern accents.
Whether you're with us on TV, radio, or online, every morning, it's breakfast from 6 a.m. Hope you can join us.
Join us for Ministry of Defence, the comedy panel show that's just like the news, in that the left fights the right and it doesn't really seem to matter who wins. We cover the big stories. It was in fact a troop of baboons and not angry vegans.
I like that.
And the really important stories.
Fat naked cow gets stuck in swimming pool.
It's a headline in a lot of local newspapers. Yeah.
We're on the same team, Nick. Yeah, but I'm just helping you.
Join us for Ministry of Defence, Saturday nights, 8 o'clock on GB News.
I'm Dan Wootton. Join me Monday to Thursday from 9 to 11 for the feistiest and most fun news debate on TV, where free speech reigns. I'll bring you a sharp take on the day's biggest stories, bombshell newsmaker interviews, and A-list guests. And I guarantee you, no spin, no bias, no censorship, and no reason to go to bed. That's Dan Wootton tonight, Monday to Thursdays from 9 on GB News.
And welcome back. It's 1:37 and you're on the money. Now, millions of households across the UK are, of course, struggling as energy bills remain elevated and the cost of living crisis gets worse. But what are the options for hard-pressed families and individuals? Well, ZipZero is a new and free app designed to help consumers save on high bills. With nearly £30 billion spent yearly on digital advertising, towards the payment of consumers' energy bills, ZipZero aims to redirect this money back to consumers and the UK economy. Here to tell us more is Mohsin Rashid. He is co-founder of ZipZero. Great to have you in the studio. Tell us how the business works. What's the idea behind this app?
The idea is twofold, Liam. As you said, we live in a time of unprecedented economic crisis. Unfortunately, I am old enough to have experienced 2 previous crises. This is uncharted territory for us. When you have the managing directors of leading utilities claiming that up to 40% of the population may be in fuel poverty, the Office of National Statistics says the price of budget household staples is up by 50%.
So how does your app help?
So essentially what we do is we reward customers for shopping. So customers using our app, it's very simple, can shop online or they can scan any physical digital till receipt and they receive cash rewards for every £1 spent. Those cash rewards can then be directed towards the payment of any household bill, from utility bills through to council tax.
And how does your business make money then? It sounds too good to be true.
Well, I mean, I don't want to say it sounds too good to be true, but we are taking money that exists in the existing digital ecosystem and redirecting it. As you said, £30 billion is spent annually on digital advertising in the UK. Unfortunately, none of that money ends up in the pockets of consumers. It goes to big tech. So what we are doing is taking that 30 billion, which is approximately £80 per household, and trying to put that back into the pockets of the people. So the majority of the money we make goes directly to the consumer.
So people use your app as like a shopping platform and they get some of that money refunded effectively. Is that how it works?
That's in a nutshell, that's exactly how it
Okay, I
works.
get that. And so the companies, the retailers that are subscribed to your platform, they pay your platform.
Yes.
And consumers pay the same price via your platform that they would on any other shopping platform?
In many cases less, Liam, because the way our platform works is in order to maximise rewards we can give consumers, we build up an understanding of what they like, what they buy, which means retailers are better able to target them with higher value cash offers.
It's interesting, isn't it? I mean, some people are really sceptical of tech and, they must be ripping me off somehow. They must be, using my data, selling it and so on. I'm not saying you are for a minute. I'm actually making the counterfactual here, Mohsin. I'm saying that sometimes tech can really just help people by spreading information, and you're using your app to bring in retailers to take advantage of an audience that you're creating.
Exactly, Luke. Community is very important to us. A social mission is at the heart of what we do, and we want to bring together retailers, utilities, local government, because we are all part of this ecosystem and we can work collectively together to help everyone through this crisis. But you're right, look, we are taking money that would go into the pockets of big tech and trying to give it back to the consumer.
That's interesting. Is this a brand new idea, this idea of sort of conglomerating retailers and offsetting advertising spending? Have you seen this happening in other countries, or is it just something that you and your co-founders have dreamed up?
We believe this is unique. We haven't seen it anywhere else. But if you think about the problems facing consumers today, Liam, we are aligned with utilities and local councils and government because we help people pay their bills, so they should help popularise our message. And we can then, the more engagement we have on the platform, the more we can sweat retailers for larger value rewards for our customers. So we can work collectively together for everyone's benefit.
When did the app launch and what are your numbers looking like at the moment, Mohsin?
We launched at the end of last year, so we're quite a young business. We've just crossed the 100,000 user threshold, but we're seeing great early traction, engagement. Our users on average typically save already between £30 to £50 a month, but that's a starting point for us. Our next goal is to give people up to £80 and then move beyond that.
And what's your background, if I may ask? Are you a tech guy? Are you a retail guy? Are you generally business? How did you get into this?
I'm a tech guy, so I used to work in business development for a large US tech platform around the insurance company, and my co-founders have a background in tech and loyalty.
It's a really interesting business by the sounds of it. I'll be interested to see how it works out.
I would love for you to download a copy of the app and start saving money straight away.
Mohsin Rashid of ZipZero.
Thank you.
Great to have you here on the show. You're welcome. Mohsin Rashid there, the co-founder of ZipZero, another interesting business featured here on The Money. Now, the ongoing cost of living crisis hasn't just affected households and families, of course. Businesses are having to think of new ways to survive what has become a very tough climate, as we've just been discussing, especially for those small and medium-sized local firms that we like to highlight here on The Money. Well, a butcher and a brewer in Northumberland, they found an innovative way to work together to help both their businesses thrive. Our North East of England reporter, Rachel Sweeney, has the story.
They've been selling beef for almost 150 years. Now they're brewing beer too. Turnbull's Northumbrian Food and Alnwick Brewery are ensuring growth in a tough economy by joining forces to make a traditional English golden ale. Dan Turnbull is a sixth-generation butcher. He's been learning how to add hops to the ale, which will eventually end up in some of his recipes.
Well, I think it's really important to always be diversifying the business. Butchery especially has changed a lot in the last 10 to 15 years, and we can incorporate this product into some of the products that we make as well. It keeps it nice and local. We're supporting another local run business, and in the current climate it's really important to support local businesses.
What products does the ale go into?
So we make all of our steak and ale pies using our own signature beer, and also some of the value-added butchery products that we use the beer in that as well.
At the local food hall, customers buy from both businesses. It's hoped the ale is enough to strengthen revenue while customers face a higher cost of living. The butchers and the brewery both date back to the 19th century. They're collaborating now to create an ale, Turnbull's Gold 1880, named after the year Turnbull's was launched. Phil Bell is the head brewer at Alnwick Brewery.
We've had a good relationship for a lot of years and we're good friends, so it's been a lot of fun to be able to pull together, and yeah, after 18 months we finally got there and we've got a really good solid product.
Are you proud?
Very proud, always proud.
Diversifying and standing together. Cheers to that.
All the best, mate. Thank you.
Rachel Sweeney, GB News, Northumberland.
The butcher, the brewer and the TV reporter. Rachel Sweeney there, our North East correspondent. It's time now for my daily interview series, Money Talks, and today I'm joined by Andrew Lane. He's Managing Director of Yorkshire manufacturer Union Industries. Not your typical business. Union Industries is employee-owned, meaning workers can have shares in the company in a bid to ensure its products remain manufactured in Yorkshire. From its origins as a tarpaulin maker and repairer, Leeds-based Union Industries manufactures a range of industrial products, specialising in high-speed electric roller doors. The ones you often see in distribution centres across the UK and Europe. They work with companies like Tesco, Jaguar, Asda and many more big firms. So here he is, Andrew Lane of Union Industries, my latest guest on Money Talks. Great to have you in the studio.
Thank you.
You're more than welcome. You come down from Leeds to see us. We're
I didn't
most
even
grateful.
need a passport to get in, which surprised me somewhat, but that's life.
You're always welcome. You're
Thank
always
you.
welcome. So tell us about the business. How long's the business been around? I know you're a very proud Yorkshire firm. Is it a long-standing firm?
Yes, absolutely. This is our 50th year.
Wow, congratulations.
So we were formed by a husband and wife team way back in 1972, and they spent 45 years of their life building this business, and then they effectively gave it to the employees.
That's an amazing story. So tell us about the kind of products that you make now. I know you specialise in these high-speed electric doors. They're pretty intricate pieces of engineering, aren't they? There's a lot can go wrong if they're not really precision-made and maintained.
Oh, absolutely. And to our customers, the big supermarkets in their enormous high-tech distribution centres, reliability is absolutely paramount. And our doors are all engineered specifically for the opening that they'll be placed in. And they are designed...
All bespoke, then?
All bespoke.
Yeah.
And they're designed for the needs of that customer, because they vary. And we can't give them a one-size-fits-all approach.
Tell us about the ownership of the firm. It is an amazing story. I've read about it in the past, that the firm was basically given away to the employees. How does that engender a sense of belonging, a sense of pride, a sense of place, a sense that this is a Yorkshire-based firm run by people from Yorkshire?
A local company for local folk. It does engender, because our focus is subtly different. We're not paying back investors or paying owners with demands on withdrawing cash. We are looking at constantly the sustainability of our business, how it looks after its customers, because without that, there is no business. And then making sure that the employees are part of the whole fabric of the company and that they are appreciated and rewarded appropriately.
Tell me how lockdown was for union industries. A lot of manufacturers did actually manage to keep going during lockdown. And yet, since lockdown, as the supply chain issues, the global supply chain issues have lingered and got worse in some cases, a lot of manufacturers have suffered. You use a lot of steel. I'm sure you use a lot of rubber, lots of other components. There's a shortage of these things in recent months. How's it going?
Very well. So the positive message here is, let's just go back to employee ownership for a minute. When we transitioned, one of the things we said we wanted to do was to increase our cash reserves, build a war chest for whatever was round the corner that we didn't know yet. And when COVID hit us, we had money to... And before COVID, actually, we lost half of our factory to a fire.
Wow.
And we were building our product in the car park the day after the fire to make sure
That's Yorkshire grit for you.
It is. And so all COVID was for us was another opportunity to navigate round and to be resilient. When lead times started moving out, we just used some of our cash and we increased our stock massively. And that's how we kept going and ensured that all of our promises to our customers were kept.
Now, you are very much customer-driven, and we've discussed how the fact that you're employee-owned drives forward that customer focus in a kind of self-reinforcing virtuous circle. But there is a lot of supply chain inflation out there. Manufacturers like you, like all firms, are facing increased costs they must pass on to customers. How's your cost base, Andrew? As I say, steel, it's getting a lot more expensive. Rubber's getting a lot more expensive. All the stuff that you use, wage pressures are going up, given that the cost of living is going up. What's happening to the prices that you're charging your customers?
Well, inevitably, when material prices rise, we do have to pass that on, or a portion of that on. We do tend to, though, we've got this buffer, this cash buffer, that means we don't have to knee-jerk to something. We can wait until a price, if it's going to spike, till it levels out and know where it is, and then work with our long-term customers in delivering the best value still that we can. And it's not usually about price. Service is usually more important than the pound value of a piece of material.
What share of your work is here in the UK compared to overseas, Europe and elsewhere? Because what you're doing, you're not just installing a high-speed roller door, and of course they're very good quality, you have an excellent reputation, it's why you're here on The Money with me now. But these products, they need maintaining, don't they?
They do.
You don't just sell this and then disappear into the distance.
No.
Does that mean that most of your product is inevitably in the UK, or do you have a distribution system and indeed a maintenance network beyond the UK?
No, it is mostly in the UK, and we don't push export for that very reason. Because when somebody buys a product, they're entering the union family, and we're going to look after those people for the entire life cycle.
Conks out. You've got a warehouse full of stuff. The door's got to work, right?
It's got to work. Well, and you could be talking millions of pounds. And so we absolutely have to be there, and we invest heavily in people and technology that will allow us to get there. We've got a door now that tells us when it's feeling poorly. It sends us an email so we can be proactive. The door
sends you an email.
It sends us an email so we can be proactive, and we can say to the customer, before there's a breakdown, something's not right there, let's go and let's get it fixed.
And what do you think more generally, Andrew, about the business environment here in the UK? We have many, many business leaders come through this studio. Big companies, small companies, manufacturers like you, tech people. You just had national insurance increase for both employers and employees. In the end, the firm funds all of that. You got national insurance, you got a corporation tax rise coming down the track from 19 to 25% this time next year, if indeed the government goes through with it. The legislation is there, as you know. You've got massive business rates to pay on your premises before you've made any profit, before you've made any revenue at all. Could the government be doing more to make life easier for business, to keep this economy moving?
I think we've got to take this topic really in the round. So when the pandemic hit, the package of support that was on offer was more than anybody expected. But that didn't come from nowhere. There's no money tree here shedding its leaves that people are picking up. We had to, the country had to support the business and manufacturing and the wider retail sector, and it did so. But there's a bill to pay. And when the 25% corporation tax comes in, yes, it's going to hurt. It's going to hurt our employees because we share a fair portion of our profit with our employees. But those bills have got to get paid. And so I am kind of...
You're philosophical about it.
Philosophical, because there's a bill to be paid.
But in the end, won't bills get paid better if taxes are lower and you get more growth? I mean, this is the central dilemma we face, isn't it? This is a dilemma at the heart of the Conservative Party, at the heart of our politics.
Yeah. No, it absolutely is. And there's a dichotomy there. And I think that we need to promote growth. And so when we're talking about increasing taxation, if that taxation is deployed on developing growth, then it's there for a purpose. And I think that we will grow our way out of this. We are a resilient nation, full of resilient little companies like ours, and big ones, and we will fight our way out of it. Give us a chance, we'll get back to growth.
Last question briefly. Why is Yorkshire the best place in the UK?
Have you been? God lives there.
Not bad at cricket as well. Well, they used to be. Andrew, great to see you.
Liam, thank you very much, sir.
Managing Director of Union Industries, Andrew Laynett.
Fabulous.
Thank you. Really interesting to hear from you. Let's bring in a couple of your views now on the Bank of England's decision to raise interest rates to 1.25%, just a quarter point increase. Chris says, it's absurd that we're talking about 25 or 50 basis point increases in the base rate when inflation is 9% and forecast to rise further. The Monetary Policy Committee's primary objective is, quotes, price stability, writes Chris, and other objectives such as economic growth are secondary. So why? Simple. They've allowed consumer prices to rip to avoid bursting their precious housing bubble. Interesting perspective there from Chris. David says the trouble with the Bank of England is that they've been ignorant of the inflationary pressures for the last 2 to 3 years. That I agree with David. Bang on the money. Economists all around the world have been warning of inflation rates increasing, but Andrew Bailey insisted, he's the governor of the Bank of England, of course, it was transitory, only late last year. Wrong man in the wrong job, says David. Clearly doesn't have a clue. Keep your emails coming. Thanks for them all. Great to hear from you, as always. That's all we've got time for today and indeed this week here on The Money. But join me at 1 p.m. on Monday, where I'll be continuing to focus on the cost of living crisis and helping you to beat the squeeze. But for now, have a great weekend. Go careful in the sunshine. And thanks for your company, because this is GB News. I'm Liam Halligan, and that was On The Money.
Hello, Alex Deakin here with your latest weather update. Today is all about the heat in the south, but it's not hot and sunny everywhere. We have cloud and rain across parts of Scotland and Northern Ireland this morning from this weather front. But this area of high pressure has been dominating of late. It's edging its way eastwards, which is allowing even hotter air to arrive across parts of England and Wales. That's why temperatures will peak today in the low 30s. But that weather front further north is making for a damp start. The rain should ebb away, actually, from much of Scotland and Northern Ireland, turning brighter here, but we will see some of that rain pushing into parts of northern England, clouding over a little bit across Lancashire for sure. But further south and east, most of England and Wales, dry, hot and sunny. 33, 34 in the London area up towards East Anglia. It will be cooler elsewhere. Certainly some coasts will be cooler, but many places well above average. Much cooler air, though, for Scotland and Northern Ireland behind this weather front, which will continue to dribble southwards overnight, providing a little bit of rain for a time over northern England and maybe Wales. 1 or 2 showers in the far northwest, where it'll be quite breezy, a cool, comfortable night across the north, but another very warm one further south, particularly so across the southeast. How does the weekend shape up? Well, it's a bit of a mixed picture because we'll hold on to the very warm conditions across the southeast, but for much of the Midlands, Wales, cloudy in this zone with the likelihood of some rain, which could be on the heavy side as well, perhaps also affecting southwest England during the afternoon. Further north, well, it's on the cool side, certainly compared to of late, but actually quite a pleasant day for Scotland and Northern Ireland. Bright and breezy with some sunny spells. The rain could turn quite heavy as we go through the day. Some brighter colours there over parts of the Midlands, Wales and northern England. The southeast and East Anglia staying dry until the evening when there is the risk of some heavy thundery showers, but they'll be somewhat hit and miss. By Sunday, there's still a chance of some showers, but mostly across the south, turning drier through next week, but also quite a bit cooler.
We are GB News.
We're right across this great nation.
On TV, on radio, on digital.
Absolutely everywhere.
We don't talk down to you.